What's up, everyone? So today is quite a crazy day in the markets, and I'm just gonna show you what's happened and what do I expect to happen next. So usually, when you have erratic price action like today, the dollar was selling off, then the CPI, the inflation data came out. It obviously ran all the stops. It stopped out all the shorts because they saw that this is the ceiling. So all the stops were positioned. Obviously above this level, right? So this is why you get those wicks. But then you have this strong reversal. Why? Well, because people who actually went long on the CPI data news, they their stops were here, right? So this is why you see the wicks forming here because they ran the stops for the shorts, they ran the cleared stops for the longs. And what's going to happen next is going to be the real move. If we're going to start closing below, I think we might see some kind of lower price action for Friday till tomorrow. But overall, the trend is probably still staying strong, and I'm betting that this is a pullback in a longer term rally because obviously the dollar has been nothing but up. So you're gonna have those erratic moves happen, and obviously the trend is overextended. But with CPI coming in hot again, that means that the Fed has to still keep on maintaining their aggressive rate hikes, which is 75 basis points, and that means that I think we still have some room to go because the markets will have to price it in even further. So let's take a look at bonds. Actually, what are they doing? So the bonds, obviously, this is we'll see how the day closes, right? So same thing happened. We ripped. Now we'll pull back, but we're not even see unlike the dollar and currencies and cryptos and stocks, where the bonds have not taken out these stops, so they can easily pause at this previous level and order block and just do this. And if the bond yield is going to keep on rising, this is the yield, meaning bonds will be selling off. That means that the dollar is going to keep on rising as the dollar is high. The dollar looks pretty much exactly. It's going hand in hand with the bond yield right now, as you can see. See, same thing, very close. And I posted a chart a few days ago that shows pretty much similar picture. So the bonds are the yields on the bonds are meaning the dollar is yielding more than other currencies. That's why it's being driven up. Meanwhile, all the others are being offered, meaning sold. Anyway, so I think this is going to be either one of those epic bottoms for October, but it looks like we've basically we sold off. We stopped even in the Nasdaq. We stopped out the shorts, the weak shorts, and now the people who push this market, the market makers that push this price up, stopped out the shorts, and now you can see they're taking profit. That's why the price is falling. And if we actually close the day somewhere here today, that means that next week we're still going to be keep going down. If we're going to have a very bullish close, highly likely Friday and maybe Sunday open and Monday early next week, we might see some follow through. But fundamentally, the picture hasn't changed. So we got to trade with the trend, which is down for risk. Hope it helps. Enjoy.